everyone, let me introduce myself. I am Desilia Sri Utami with NPM 244120001, Accounting Study Program, Class of 2024. Here I will show a video about the definition of accounts, types of accounts, explanation of the normal position of each account, and how to enter transactions into the general journal. This video is one of the assignments for the Introductory Accounting course with the lecturer Dr. Darma Rosmala Sari M.S.Ak. Happy watching! Understanding accounts and their types. Accounts in accounting are a medium or tool used to record and group financial transactions. Accounts in accounting consist of 5 parts, namely assets, liabilities, equity, revenue, and expense. Explanation of the 5 accounts as follows. 1. Assets are all wealth owned by a company, both tangible and intangible, which can be valued in money and can be used in the operations of a company. Examples of assets include cash, trade receivables, promissory notes, supplies, equipment, inventory of merchandise, and so on. Assets are also divided into 2, namely current assets and fixed assets. 2. Liabilities are obligations or debts owned by a company that must be paid to other parties. For example, trade debts, accounts payable, promissory notes, long-term bank debts, and so on. These liabilities are divided into 2, namely short-term debts, current liabilities, and long-term debts, long-term liabilities. 3. Equity, capital, is the capital invested by company owners in the company. 4. Revenue is income or the amount of money received by a company from selling products and services to customers. 5. Expense is the expenditure incurred by the company to run its business in a certain period. For example, building rental costs, employee salary costs, advertising costs, and so on. Normal position in account. 1. On the asset account, the normal position is on the debit side. So when assets increase, then put it on the debit side. If assets decrease, then put it on the credit side. 2. The liability account's normal position is on the credit side, so when the liability increases, it is placed on the credit side. When it decreases, it is placed on the debit side. 3. The normal capital account is on the credit side. So when the capital increases, it is placed on the credit side. When it decreases, then it is placed on the debit side. 4. The normal revenue account is on the credit side. When revenue increases, it is placed on the credit side, and when it decreases, it is placed on the debit side. 5. The hormone expense account is on the debit side. If it increases, on the debit side, and if it decreases, then put it on the credit side. How to enter transactions into the general journal as follows. 1. In the first case, he invested $20,000 in capital for the company. The way to enter it into the journal is generally that his cash increases on the debit side and Harry's capital increases on the credit side. 2. Second transaction. It is a purchase of equipment for $1,000 in cash. So the general journal is that equipment increases on the debit side and cash decreases on the credit side. 3. Namely the purchase of equipment for $15,000 in cash. The general journal of the transaction is that equipment increases on the debit side and cash decreases on the credit side. 4. The fourth transaction case is the purchase of supplies of $200 and equipment of $1,000 on credit. So the general journal of the transaction is supplies increased on the debit side by $200, equipment increased on the debit side by $1,000, while on the credit side is accounts payable of $1, 200. 5. In the fifth transaction, namely borrowing money from the bank for $4,000. Then the general journal for the transaction is that cash increases on the debit side by $4,000 and bank debt/notes payable increases on the credit side by $4,000. 6. The sixth is the transaction of receiving service revenue of $3,000 in cash. So the general journal for the transaction is that cash increases on the debit side by $3,000 and revenue increases on the credit side by $3,000. 7. In the seventh case, there is an employee salary payment of $800. So the general journal for the transaction is that the expense increases on the debit side and cash decreases on the credit side. 8. In the eighth case, namely the day of taking money from the business for personal needs amounting to $500. Then the general journal for the transaction is withdraw or prive increases on the debit side by $500 and cash decreases on the credit side by $500. That's my explanation. Hopefully it's useful. See you next time.
Oke teman-teman, terima kasih sudah menonton video